Podcast. I am your host, Dividend Dave. First, I want to say a huge thank you to everyone who has joined the Passive Income Posse and subscribed below. As many of you know, we just passed that 1,000 subscriber milestone on YouTube, and obviously that is a major milestone. So, thank you to everyone who has supported the Passive Income Podcast, and let's keep growing the posse. And today's episode, you can find him on Twitter at DivDollars. I'm going to throw it over to you to give yourself an introduction.
Yeah, good morning. Thanks for having me on. Please, it's a pleasure to join the posse. Congrats on 1,000 subscribers too. That's pretty sweet.
Thank you.
But yeah, my name's Tanner, or Dividend Dollars if you follow me on Twitter at all. I am a relatively young dividend investor. I kind of got into investing while I was going to college studying finance. At that time, dividends didn't even occur to me. I was kind of more chasing penny stocks and that kind of stuff, the things that you see pumped in Discord rooms. And we all know that how that turned out, with Atlas now getting sued by the SEC and all that good stuff. So I didn't find a path there. I tried a bunch of different investing types, and I was day trading during the pandemic because I was working from home. It was really easy to do that with an office setup at home. But then I had to switch jobs. Now I'm in an office, don't necessarily have too much time to do that anymore. So I had to rethink what I was going to do as far as investing goes. And a memory kind of came back to me of getting my first ever bank statement with a 2-cent dividend on my savings account when I was 7. And
Yeah.
I know that's a different kind of dividend from dividend stocks, obviously, but I was even at a young age, I realized that that's free money. You can compound that and it becomes really powerful. So with a lot less time on my hands being in the office, I decided to kind of begin my dividend journey. Been at it for a little over a year now, a little over a year. I started September of 2001 or 21. Sorry. So, and I'm writing about my journey on my website, posting things pretty regularly on Twitter. So yeah, that's me.
Cool. Actually, I've perfect timing segue here. Here is your blog. I will put a link in the description below. So yeah, you want to maybe even talk to how you got started writing blog posts and
Yeah, kind of what kicked it off for me was Twitter was the first place that I went to try to find information on dividend investing. I mean, having studied finance in college, investing wasn't really a foreign world to me, so I pretty much knew the basics. I just kind of wanted to see what other people were doing. So a lot of the bigger dividend accounts were kind of showing some pretty impressive just passive income through their dividends, but they don't really share their portfolios all that much, especially the bigger ones. So I'm young. I want to get to that point eventually. So maybe I'll kind of show a path to how I did it, assuming I get there at some point in the future.
yeah, and I'm
So I
sure
was
you will. You have
let me
plenty of
start a
time.
website. I do weekly updates, pretty transparent about everything that I do. So maybe one day when I get there, it'll be kind of a path that someone can see how I did it or kind of follow the track record and learn from my mistakes or my successes, hopefully. And do it themselves one day.
Awesome. Yeah. So, like I said, I'll put the link for this in the description, and then you can see there near the bottom of the homepage. You can find Tanner on Twitter, Instagram, and TikTok. So, if you want to follow him on any of his socials, it'll be easy to click through the links.
Yeah, mostly Twitter. I have those Instagram and TikTok buttons up there because there are accounts, but I'm not super active.
Right. Cool. Cool. Let's get into talking about some of the types of investings that you do. Any particular sector that you focus on?
Not necessarily. It's mostly I kind of invest with what I'm comfortable with.
Right.
So, and I'm still discovering that, So right now, a good example of that is I just got out of all my healthcare stuff. I know healthcare is a huge sector. Demographic shifts are going to be a huge tailwind for healthcare, but I'm not a doctor, nor do I really follow those kinds of products. I'm young and relatively healthy. I know Johnson and Johnson sells a bunch of kind of generic stuff that everybody uses, but even me, I don't use that stuff very often. So it's just in terms of what I'm comfortable with, that's kind of what I stick to investing. So I really like Microsoft. I use their products all day, every day. Utility companies are pretty simple to understand, so I'm pretty comfortable with those. I would say ETFs are always a good way to go if you're just kind of like looking to diversify, but not necessarily wanting to track a bunch of stuff. So those are kind of the routes that I stick to.
Interesting. Yeah, ETFs obviously are a great option. You don't have to. You really don't have to do a lot of work, right?
Yeah.
Um, One of the most recent guests I've had on was at SCHD
Yeah,
Dan on
I saw
Twitter,
that. Yep.
and so obviously he's very huge into that ETF. Is that the type of ETF that you would be into as well?
Oh yeah, SCHD is one of my biggest holdings. I have it my portfolio pulled up on the other screen here. Um, it's sitting at 5% of my portfolio right now, and I have two other ETFs, SPY and XYLG, which is a covered call ETF, but it's also they hold on to half of their portfolio to
Right.
get that capital appreciation. So it's like 50% covered call ETF. Those are my three main ones, and I put money into those guys every week, regardless of where they're at.
Yeah, so that's dollar cost averaging is a great way to go as well. And you being so young, you have plenty of time to just keep stacking it, as we say on Twitter, brick by brick, right?
Yep, brick by brick.
Just keep going. And so yeah, I'm just curious that covered call ETF, does it have a higher yield because of the covered calls?
It does. Covered call ETFs tend to have a pretty high yield. So, like I was saying, this one's only a 50% covered call in terms of the portfolio. The rest of it is they hold on to the
Right.
indexes for price appreciation. So this one has a little bit lower yield than you would typically see, but it's still, I think it's 6% around there. The other ones can push 9 or even 10, 12% kind of in that range. But a lot of people use the covered call ETFs. They're typically older than me and they use it for income. I don't like need that yet,
Right.
but so that's why I think that 50% is a good place for me because I still get a little bit of that appreciation. And one day, if this position builds up pretty high, it'll be a good income stream in terms of dividends that I can pull out and not reinvest back into that ETF, but put towards my other positions if I want.
Yeah, I have one covered call ETF here in Canada. For those that don't know, Tanner is in the US, and obviously most
Mhm.
people know I'm in Canada. And I have one covered call ETF, and it's just got a ridiculously scary high yield, like 15 or 16%. And I don't have a huge position in it, so I'm not like overly scared, but at the same time, it's like, how sustainable is a 15% yield, right? But
Yep.
you know what? And it pays a monthly dividend, so as long as that dividend rolls in every month, I'm happy with it. So, and it does obviously hold um, within its portfolio some very the strong companies in Canada, like the Canadian banks and the telecoms. So it's got a good base, obviously, with those companies, but at the same time, you're like, wow, that yield is it's scary.
Hmm.
Cool,
But it's
cool.
another reason why I like it is because I want to get into selling covered calls when my positions are big enough. And at this point, I only have one position of more than 100 shares that I can do that with.
Right.
I think selling covered calls is a great way of boosting the income you can make off of your positions. So since I don't really have too many positions that can do that, might as well buy an ETF that can do it for me.
Yeah.
In the interim while I kind of reach that goal.
Yeah, awesome. No, that's a great plan. That's a great plan. So, I also have to ask, kind of diving into the REIT sector. I believe every single American guest I've had on the Passive Income podcast, and even a few Canadians, have owned Realty Income, ticker symbol O. And I'm
Yep.
just curious, is that are you keeping the 100% streak alive?
I am. Yeah, I do have it. I'm actually not a huge REIT guy. But that one is like what is their slogan or their logo? Like the dividend company.
Right.
I felt like I had to. So I've got a couple shares. It's not large by any means, but I do have it.
They definitely seem like the gold standard of REITs in the
Hmm.
US. Any other
Yeah.
REITs that you're into, or
No, that's the only one I've got. I do kind of want to dive into that sector a little bit, but as of right now, I haven't done too much research into it. So
right?
yeah, I think real estate in general is just kind of a shaky area, especially in the US market right now. So I will wait on that. But I think a good time to put money into those guys is coming up soon. Either that or home building stocks like DR Horton or Tolson. I used to work for a home builder out here, so I'm pretty familiar with that industry. So
Right.
that's, kind of going back to what I was saying earlier. Familiarity is what I like to stick to, because I still have a day job. I can't put all my time into analyzing my stocks every day and
Right.
making sure they're good. I'd rather feel comfortable with it.
Yeah, and you can really do that with dividend investing, right? Like,
Mm-hmm.
for the most part.
Yeah.
I Sorry, I had a blank there. Oh, I was gonna say, just going back to REITs, what I like about them is that, again, you have that exposure to real estate without being the landlord. I don't have to deal with any of the properties of, the hot water tank goes down and I have to replace it, or anything like that. I don't have to hire a property manager. And for all of the REITs that I have here in Canada, they all pay a monthly dividend. And I get it. I mean, 5% is 5%, whether it's paid quarterly or monthly, but it's just really nice to see that roll in every, say the 15th or 16th of every month or whatever day it happens to hit your account, right? So yeah, that's
Yeah.
what I like about REITs.
It is nice, and I can't speak for any of them other than obviously, because that's the only one I have. But it's got a super stable price too. I mean, for the year and a half that I've been investing, it's probably one of the most volatile markets that we've seen in the past couple of decades. So that's a big benefit to me right now, at least.
Right. Yeah, and
Obviously,
it's
it
got
kind
that.
of. Sorry, go ahead.
I was just gonna say it's got that amazing growth. Like, I understand it's only like a small growth, but every quarter they increase their dividend, and so it's like, as long as they keep giving you a raise, and I mean, I'm guessing your day job, they don't give you a raise every 3 months.
No, they don't. I wish they did.
Yeah,
If
right.
they did, I probably wouldn't be a dividend investor. Getting dividend raises every couple months or so feels real good.
For sure. Yeah. And so that's, kind of going back to that one I have with the high yield, whereas a lot of my other ones, I'm really more focusing on the dividend growth, just because that's, you want to see that raise. It's usually a yearly raise, but most jobs you don't get a raise every single year. Maybe some
Yep.
you do, but for the most part, you're lucky to get a raise every 2 or 3 years, right? Interesting. You did also mention energy there at one point. I'm not sure the name of the company. Well, or did you say utilities? Um,
Yeah, utilities or energy in general. I kind of approach them as the same, because
yeah,
I don't have any oil stocks. I did start my journey with some Chevron and with some Exxon, and those guys gave me some pretty sweet gains, which I took off the table maybe like 6 months ago at this point. But I um I do think ESG and clean energy is going to be a really big theme coming up, not only this year, but for the foreseeable future, especially with the Ukraine-Russia war going on. I think a lot
right,
of Europe has realized through this winter, and thank God it's been a fairly mild winter. I think they've realized that they need to get out of Putin's oil pocket. And so oil is bad in general, but to kind of add that onto the backdrop of, people have been talking about climate change for a really long time. I think that's just adding fuel to the fire and kind of bringing a lot more attention to it. So I have, I think, three at this point, three energy stocks that are all, not all, but have an emphasis on renewables. So I've got NextEra Energy and Orsted, which is, they actually used, I think their company name used to be the Norway Oil Company. But within the last decade or so, they've transitioned to fully renewables. So they have wind farms out in the North Sea. They do water power. And then the other one that I have is, hold on, the name's escaping me. I got to look
yeah,
at my portfolio right here.
no problem.
Um, Oh, AY is the ticker, but it's Atlantica Sustainable Company. They're kind of like a holding company that buys like wind farms or nuclear power plants, other kind of renewable energy infrastructure kind of throughout the world. They're mostly in South America, I believe, but they have a pretty high yield, and they're not necessarily involved in the construction of these things. They just kind of buy and hold them
Right,
and operate them. And these things, all of these kinds of farms and projects have effective lifetimes of 30 to 50 years. And they're all contracted by the respective governments that, of the countries that they lie in. So like their income's pretty much locked down for decades as soon as they buy these projects. So pretty stable. They don't get too much price appreciation, but the dividend's real solid. And I think as these things kind of pick up more steam, there'll be a lot of tailwinds for that industry in general.
Yeah, and I think for someone your age, renewables is probably a great place to be. Not financial advice for anybody who's your age
Mhm.
that might be listening or watching, but yeah, obviously the future is transitioning towards renewables. I think oil and gas is still going to be around for a very long time.
Oh yeah.
But with that said, yeah, there's a lot more, solar energy, wind energy, and other renewables. So I think, like I just said, for someone your age, I think that's a very smart play.
Yeah, and it's silly to think too that Chevron or Exxon or the other big oil companies that you can think of aren't preparing for that transition as well. So I'm
Right.
not saying they're bad investments either. I'm just I don't know too much about oil honestly, but in terms of like solar farms and wind farms, those things aren't too hard to understand for me. So I'm pretty attracted to them, and I like reading about them as well.
Yeah. Interesting. Interesting. Uh, let's dive into the banking and financial sector. And it's very different between Canada and the U.S. I'm sure, as you've seen from Twitter, following myself and other Canadians, the Canadian banks are, the big five. You can include National Bank as the sixth one, the big six. And whereas in the U.S., you kind of have, similar, a few really big ones. Your JP Morgan's, your Wells Fargo, Bank of America, and then just so many regional banks as well. Um, anything in the banking financial sector that you're invested in or interested in on your watch list? What are your thoughts on that sector in general?
Yeah, I think banking in general is an awesome sector. For the Canadian region too. I had TD as a Canadian bank, right?
Yep, Toronto
I
Dominion.
held on to that for a little bit when I started, and that was another one that gave me pretty gains pretty quickly. So I took those off, and now I only have U.S. stocks right now. So I hold on to Ally Financial and Bank of America. Bank of America is mostly kind of like a value play, and I feel pretty confident in it. Because Warren Buffett buys into it. Obviously, I think it's like his third, his fourth largest position, and he doesn't miss very often. So that's pretty much my sole reason for having that one. I do think that they are making strides in becoming in making it more of a consumer friendly retail bank. Their deposit growth has been pretty good for the past couple of quarters that I've been watching them. And they also show that consumers are pretty strong in general right now, which is interesting given the kind of macro environment we find ourselves in. But so
Right.
I like Bank of America and Ally Financial. Ally Financial is kind of my alternative to investing in SoFi, kind of those online consumer banks. SoFi is still very much in their growth stage. I don't think they have produced earnings yet. So Ally is kind of the same. They're obviously targeting a different group of consumers, but they're one of those kind of online only banks. But they have a lot of relationships with auto dealerships. They provide car loans. Um, and I think that's an interesting spot in the market right now because as soon as if a recession comes or as people start to feel inflation in their wallets more, my assumption is car loans are the things that start to get more delinquencies or start to have missed payments and that kind of stuff. And I think
Yeah.
they're starting to see that in their earnings report. So I don't know. I think I don't have a huge position in Ally, but I do think they if a recession doesn't hit too hard and the auto industry doesn't hit too hard and their asset quality doesn't fall too hard, I think they'll be in a pretty good value proposition place in the next year or so for a long-term position.
Interesting. Yeah. Interesting. Yeah. So that's great. The TD and a couple other ones you've mentioned where it's like, you know what, I'm just going to take some profit. It's never a bad time to take profit.
Mm-mm.
Sometimes you kind of, I sold one last year where I had a really nice profit, but I kind of regret it now because it's like, oh, that one was paying me a really good dividend on a monthly, and I would have, 10 or 12 months later, I would have made the same amount in just in dividends as the profit I took. But I mean, I guess live and learn. So
Yeah, it always hurts. I'm pretty sure I would have had a much bigger gain on TD if I held it for a couple more months before going out, but that's okay. My reasoning also for getting out of it was the fact that it was a Canadian stock and I haven't had to report taxes on my investments yet. That I just wasn't. I didn't feel knowledgeable in how that works.
Right.
So maybe one day I'll venture back into the Canadian realm of things.
Yeah, but you still would have bought it, like, on the New York Stock Exchange, right, in US dollars?
Yep. Yeah.
Yeah, I'm
I just
honestly, I'm
I
not sure how
haven't
that works
had
either.
the time that I had done it, I hadn't gone through like a full year yet, and I hadn't gone through my taxes or needed to report the things in my brokerage account or the gains that I had made. So that's something to revisit.
Yeah, yeah, and that's, pretty much one of the same reasons why I don't hold any US stocks right now is because I don't need to get into the hassle of what do I do on my at tax time, right? But with that said, I am looking at a few US companies. You may have seen my tweets over the last week or so asking sort of opinions about, whether I should start with SCHD, um, Realty Income, or Coca-Cola. The kind of were my top three picks. They're sort of in a price range I was comfortable with, and SCHD, for all the people on Twitter and on this podcast that have been pumping it. Realty Income, for the obvious reasons, every American I speak to owns it. And Coca-Cola, kind of similar to your reason, well, Warren Buffett. And two, I drink a Diet Coke almost every single day. So it's like, and going back to your familiarity, just, the products that you use and what you're comfortable with and what you know.
Hmm.
So,
Yeah, Coke
um,
is a perfect example of that.
yeah, so those are the three I'm looking at. I might pull the trigger in February or March. I don't know. So we'll just wait and see.
Yeah. Are you leaning towards one or more so than the other, or what are you thinking?
Uh, no, like, yeah, one day I'll be leaning towards Coke, and then the next day somebody will tweet something, and I'll lean towards the SCHD, and then the next day it'll be like back to Realty Income because I like the REITs and like that dividend growth every quarter looks amazing and all of that. So, and then Coca-Cola is like been paying or has had like a dividend king. So you're like, you're like,
Hmm.
how do you pick out of those three? I don't know.
Just do all three.
Yeah, well, if yeah, maybe someday, eventually.
Yeah.
Telecoms. I mentioned them briefly about some of the Canadian telecoms in that one ETF that I have, and obviously there's been some turbulence over the last few years with AT&T in the US and
Hmm.
um, some other big US telecom giants like Verizon and T-Mobile. I actually just learned recently that T-Mobile is actually I think it was T-Mobile. It's a German company that's
Oh, is
now
it
in the
really?
US. Yeah.
I had no idea.
Yeah, neither did I. So I'm gonna have to dig deeper into that. But anyways, any thoughts on the telecoms and that industry?
Yeah, I like telecoms actually. I've been AT&T was one of the first stocks that I started buying when I kind of began dividend investing, and I can't tell you how many people were like, "That's a bad decision. Don't do that. AT&T sucks." And it's funny because now after their earnings report just last week, my position's in the green. And
Yeah.
it's outperforming SPY for the year, or not for this year, but for the previous year. Um, so I've been watching AT&T. I kind of think selling off Warner Brothers and kind of refocusing back on the telecoms and not the streaming. And they've made a handful of bad acquisitions over the past few years, and they're undoing that. I think kind of going back to their strategic focus is
Going back to the roots of
going back to the roots is helping. So I got AT&T and I have Comcast. Comcast, I think, yeah, Comcast counts as a telecom. They have like the cable fiber services, and they
yep.
have Xfinity and kind of a little bit of exposure into the streaming realm of things with Peacock. I really like Comcast because of all that diversity. They have NBC Universal, they've got the theme parks and the movies and the cable services, and I think their streaming services over in the UK is called Sky or something like that. So they're pretty diversified. Old company,
Yeah.
they have a really good track record of dividends and growth, and they just had a great earnings report as well. So those are the two that I have. I held on to Verizon for a little bit. I do like Verizon, but AT&T was kind of more of a value play for me in terms of selling off Warner Brothers and kind of going through this turnaround. I think they have a lot more room to go.
Nice. Did you get into AT&T after that dividend cut a couple years ago or a year ago?
I was into it before the dividend cut, actually.
Yeah.
Yeah, so I was ready for the cut, and I took it and still holding strong. I was lucky that I hadn't invested too much when I started, so the dividend cut didn't hurt too much.
Yeah,
But now they're in. Let's see, what's their price right now? Almost pushing $20 a share. I've been buying down in the 17s and 18s for a while now, and that's
nice.
that's the one position that I have 100 shares in. So I've just started selling covered calls on that guy as well.
Oh, awesome, awesome. And then going back to Comcast, I don't know if they're the majority owner or a part owner, but I think you have a little piece of the Philadelphia Flyers there as well,
That's correct. Yeah.
which is just kind of cool, right?
Mhm.
Probably not a huge hockey fan down there in Arizona, but still.
No, I love hockey actually. I don't know if you're familiar with like the NHL at all in terms of the teams we have out here, but
Well,
the
I'm
Arizona
Canadian, of course I
Coyotes,
do.
the Arizona Coyotes, I've only ever been to a couple games, but the one game that I went to was still like my most memorable favorite in-person sporting event ever. You can't beat a hockey game live. It's just so
Nice.
much fun.
Yeah, I'd agree. I've been to many. Mike Smith, we're getting off topic here, but that's okay for a minute. Mike Smith was the Arizona goalie. I want to say what, maybe 10 years ago, give or take. I'm not sure if
That,
you.
that sounds correct. I know the name, but I couldn't say.
Yeah. So anyway, he's from my hometown, so that's just the
Oh,
interesting
nice.
connection
And
there.
he was pretty good, right?
Yeah, yeah,
Yeah.
yeah. He ended up having like between he plays Dallas, Tampa Bay, Phoenix, Edmonton or Calgary, then Edmonton. So he ended up playing for like over 15 years, maybe close to 20 years. So pretty good career. Anyways, back on track to dividend investing. uh, Consumer staples and consumer discretionary. We've already talked about Coke a little bit, but those consumer staples like your Costco's and Walmart's, and then the discretionary more the Coke and Pepsi, right? Where I have to go and get groceries every week, but I don't have to buy Coke or Pepsi products. But I guess any thoughts on anything sort of within that sector as well?
Yeah, I think it's a really good sector. I don't actually have too much of it, but Walmart, McDonald's, Costco, all huge names that a lot of the dividend folks love.
Yeah,
In terms of what I have, I've got Starbucks and Best Buy are kind of my two players within that realm. Those are kind of more so on the consumer discretionary side of things, but some people
yeah.
would argue that Starbucks is a staple. So
I guess, yeah.
yeah.
Yeah, yeah, and it's amazing, like, Starbucks are always busy, there's always people in them, and you know that they're spending they're not buying a $2 coffee, right? They're buying probably pretty much minimum probably the cheapest coffee at Starbucks now, I don't know, I haven't been there in a long time. I'm guessing $4 is probably the cheapest one you can get, right? So,
Probably more than that. I don't go there
yeah.
myself either, but they I don't know, through this high inflationary scenario that we're in, they've shown a really good ability to pass those prices on to their consumers. And they have that robust like rewards program that keeps people coming back. And China reopening is a huge tailwind for them. They've just reached like a 52-week high, and I think China's reopening has been a big part of the momentum that they've been experiencing recently. So Starbucks is great. I spent some time out in Costa Rica where they farm a lot of their coffee beans,
Okay.
and spent some time on a farm. This is when I was going to college. I did like a study abroad trip out there to study agribusiness, and spent some time on a Starbucks farm. And the amount of work that they put into farming those beans and roasting them just the right way and packaging them and shipping them off. And Costa Rica is like the prime spot. That's where the good coffee comes from, not Brazil. So they were really proud of it, and kind of definitely left a good impression on me of their quality. And so I'm probably a little bit biased towards that holding because of that experience. But I think Starbucks is a great company.
Yeah, that's a great experience to have. That would be very cool just to see it, but then also just to see how much they care about making a quality product
Hmm.
right from the beginning. That's the important part in anything in food is the farmer, right? Like
Yeah.
how good can we make this product, right? So very interesting and cool experience that you had.
Yeah, it was sweet. What kind of staples or discretionaries do you look for in Canada? Do you hold on to any?
Yeah, I have a few. I have one called Pizza Pizza, and basically just like your Pizza Hut and Domino's, and yeah, they just people are going to eat pizza, right? And so yeah, they pay again. It's a nice monthly dividend, and I'm not sure. I think it's one of my larger positions. I'd have to look to see what my percentage is on it.
That one's
Um,
monthly, you said?
yeah, and it pays a nice monthly
Yeah,
dividend. So
interesting. I feel like it's very rare to come across a monthly dividend unless it's like a REIT or an ETF.
I have quite a few that are monthly, actually.
Interesting.
Yeah. Another one I have is called SRV, and they own restaurants. Like they own one's called Jack Astor's, one's called Fire Roasted Subs. So the Jack Astor's would be like your similar to, I guess, like an Outback Steakhouse or an
Oh, okay.
Applebee's, like just family casual dining, right?
Yeah.
Um, so yeah, and again, a monthly dividend. And yeah, and I actually have quite a few of them on my watch list like that, like A&W and a few others. But yeah, so
Do you
um,
have a preference towards monthly dividends or quarterly, or do you even look at that when you're making a selection?
so in the beginning, I leaned heavy into the monthly just to try to get that income every month so I could start building my portfolio bigger, right? Now I'm looking at more of the sort of those blue chip companies like the Canadian banks and the telecoms where they pay a quarterly, and the utility company here in Ontario is called Hydro One, and so like 95% of Ontarios depend on it. More than 95% of Ontarios depend on Hydro One. So it's like, and again, going back to what you were saying about familiarity is, I know it, I use it, I pay them a bill every month. Same with Bell Canada, I pay them a bill every month. Same with Bank of Nova Scotia, I pay them my mortgage actually every 2 weeks. So right, like you've probably heard my saying, not my saying, somebody else said it, but everybody's giving me credit for it. Turn the cash register around, and yeah, so it's just trying to get those companies to pay me to pay them.
Yeah, it's always kind of rewarding when you make a purchase at a company that you own. Because I mean, stocks really are ownership of it. You're part of that company, so you
Yeah.
are kind of funding your own dividend in a way.
Yeah, exactly. Exactly. And it's you have that pride of ownership as well. You when you go buy a location like a branch of the bank and you're like, "Oh, I own a little piece of that." It's like, "Okay, I only own, 5 or 10 shares, but still that's a little
Mhm.
tiny percentage, right?"
Still something, yeah. I know
Yeah.
my girlfriend probably gets annoyed every time we're driving around and shopping. I'll go point at we drive past a Starbucks or a Bank of America, and I'm like, I own that. As we're driving past it, there it goes. There's my business.
Yeah, there's my business, and they pay me to not work for them. That's the other great part about dividend
Yeah,
investment. They pay me, whether it's monthly or quarterly, to not work for them, and
yeah,
I'm
that's a great way of looking
110%
at it.
okay with that. Cool. You've mentioned Microsoft and Best Buy, and let's dive a little deeper into technology. Obviously, in the US, you have some great technology companies, Apple as well. What else in the technology sector?
Technology, let's see. I kind of have to take a look. I've got Intel, which is a more kind of what's the word I'm looking for? There's a lot of bulls and bears when it comes to Intel. It's
I've
pretty
seen a lot of
fought over.
tweets. There's a lot going on there.
Yeah, especially after that last earnings report. So I've got Intel and Microsoft and Best Buy. I mean, Best Buy is more like retail technology,
Yeah,
but in
yeah.
terms of actual technology, there's just Microsoft and Intel is what I've got.
Yeah, not Apple.
Not Apple. I do think I want to start a position in Apple one day. They have a fairly low yield. I mean, so does Microsoft, but
Yeah.
I personally just use Microsoft more, and I think their cloud services is going to be a big tailwind for them. I'm also a big fan of Xbox, and I've been following their Activision merger for a while, so I have a couple shares of that too, if you count that as technology.
Mhm.
So I like how diversified Microsoft is compared to Apple. Apple has a lot of stuff going for them too, but I prefer Microsoft personally.
Yeah, I prefer Microsoft to Apple myself as well. Here's my thing. So I'm guessing you're old enough to remember Blackberries, right? BlackBerry was actually a Canadian company. It still exists, but they no longer make phones. They're now like a software security company. And here's what I've said a few times now about an iPhone is, you know, the iPhones basically came along and then BlackBerries were gone. At some point, something's going to come along that's going to disrupt the iPhone. I don't know what it is. I don't know when it's going to
Mhm.
happen, but there's something will come along, and all of a sudden, iPhones aren't going to be like the be all and end all of smartphones anymore, right? Obviously this is just speculation, but kind of like I saw it in the past with Blackberries that 15 years ago everybody had a BlackBerry. In popular culture in movies, people didn't say, "Oh, I need my phone." They'd said, "I need my BlackBerry," right? So, yeah, and I just see it happening again with iPhones. What do you think of that
Yeah, and
idea?
before BlackBerries, it was pagers, and I mean, both of those were out the window super fast, right?
Yeah. So
But yeah, I agree with you. I think Microsoft is a little bit more sticky, in terms of their operating system is in computers in companies' offices everywhere and in homes everywhere, and
right.
everyone runs on Word and Teams now and Outlook and all this stuff, and it's just that you can make the same argument that that could easily be replaced one day as well, but I don't think that could happen as quickly as the example of BlackBerry.
Yeah, so to your point, my job, I live in Microsoft in Excel and Teams
Hmm.
meetings and Outlook email. So yeah, very much to your point. And then even here at home, I use Excel to track my dividends. And
Yep.
so, right, it's
Yeah, you can't escape it. Microsoft's everywhere.
yeah, yeah, I spend a lot of time in Excel spreadsheets, and you would think I would be better at it.
Yeah, I do too. I was actually amazed at how much Excel can do, especially when I first really started to get into the more complicated stuff rather than just making a pivot table and
Yeah,
whatnot. When I was in college, I interned for Boeing and kind of had a pretty large project that analyzed. At the time, they were trying to vertically integrate a lot of their manufacturing. They had kind of lost some purchasing power because they stopped making a bunch of stuff in house as they historically did, and they kind of wanted to bring that stuff back. So, what my project was during my internship was to look at. They gave me a list of literally thousands of airplane parts, and they have this huge construction, this facility out in California where they can now build these things, and they wanted to look at if we build these things in California right now we're paying all of these suppliers X amount for these parts. I need you to do an analysis on if we bring these parts in, how much work will be left for those suppliers, minus those parts, and how much in lost revenues are they going to try to recoup by asking for price increases on their remaining work. And so I learned how to do that in Excel, and it was like I'd never used Excel to that extent before, and now I'm like the biggest fan. I'm a
yeah,
Excel stan. You can't beat it. Google Sheets is pretty cool and it's pretty convenient, but doesn't beat Excel.
no, not at all. This is an interesting side note. Did you know that there is an Excel World Championship?
I did actually. It must have just happened not too long ago. I kept seeing
I think a
it
few months
like
ago. Yeah,
headlines pop up on my feed here and there.
interesting. So again, that's very interesting too. You mentioned Boeing, and I'm very interested, kind of, you know, uh, including Boeing and the airlines, just sort of the transportation sector. Obviously here in Canada, the railways are huge. Obviously the railways are huge in the U.S. as well, and trucking. We talked about farmers, growing that, but we also have to get those products
Mhm.
from the farm to the fork, as the saying goes. So, what are your thoughts on transportation in general?
Yeah, I actually don't have any transportation, but it's something I've been thinking about for a while because railways are huge and they make for great dividend stocks. But yeah, I don't have any. But with the way the world population is growing, transportation is only going to become more and more important.
Right.
Um, so yeah, transportation, railways, shippers. I can't think of any names off the top of my head right now, but I do want to kind of create a watch list for those guys and get into that sector a little bit.
Yeah. Because, like I said, product needs to get moved around. People need to move around, so transportation is huge. Whether it's by moving it by truck, by train, by airplane, by sea container. Things are moving 24/7, 365 days of the year, right?
Yeah, and I wish I had looked into that kind of when COVID was running the world. I mean, the airlines have been having a heyday. It seems like with this recent earnings seasons, they're up pretty strongly from what I remember.
Yeah, I think that's another one of those though, like you have to really dig into it is like does it just look up because they were so down when the world shut down for,
Yeah.
for a year from March 2020 to whenever. And then now it's reopened and all of a sudden, okay, everything looks rosy, but it's because you're comparing it to those really down low numbers. Like sometimes you
Hmm.
have to go back and look at maybe a 5 or 10 year chart and say, okay, well, they are doing good. They're doing better in 2022 and 2023 than they did during the shutdown, obviously, right? But
Yeah.
are they doing as good as pre-COVID as 2018 and 2019?
Yeah, I don't think the flight levels have bounced back yet, but that's just my assumption. But I mean, if you look back at COVID when they weren't doing any flights whatsoever, probably would have been a darn good time to buy. Now that they're kind
Yep.
of doing some flights now, I don't think it'd be a solid long term hold. But if you're trying to play things on a shorter time horizon, that would have been a solid one.
That's actually going back one of those restaurant stocks that I bought like pretty much right in the middle of the pandemic, and I'm like, I might be the dumbest person ever or the smartest investor ever. Like, so yeah, I did get them at a low price, and yeah, they've both been doing. They're both up quite a bit since I purchased them, and like I say, I'm not turning down that dividend every month when they put it into my account. So
Hmm.
I'm happy.
Yeah, I bet you have a nice yield on cost on those guys.
I'm sure I do. I'd have to like go and look and do the math, but I'm sure it's pretty decent right now. Yeah. What else would you like to talk about?
Um, do you follow like industrials or materials companies at all? I think that's a sector we haven't hit yet. You have any opinions on that area?
Yeah, so I don't own any, but obviously there's some great companies there. John Deere, Caterpillar.
Hmm.
Again, going back to that farming and construction. So we're actually talking about the technology sector. Barry Milligan and I on a past episode just a week or so ago, 2 weeks ago, and we were talking about technology, and then we got into like heavy industrials, and he was like, I'd almost put John Deere as a technology company. When you look inside the cab of a brand new tractor, it's like you're sitting in a space shuttle. And
Hmm.
farming is going to become more automated because of all of this technology. So, it's quite the merger, I guess, between heavy industrial and technology. So, and I guess similar to Caterpillar too. I'm sure a brand new excavator inside of the cab of any new machinery from Cat is, I'm sure, amazing, right? So,
Hmm.
what are your thoughts on
Yeah,
the heavy industrials?
I love heavy industrials. I don't have Cat or John Deere, but I do believe I have the next best thing in Cummins, the
Right.
the the heavy engine company. So in terms of I think farming equipment or farming engines are kind of their biggest revenue line, so kind of within the same realms. But they as an OEM, they build a lot of engines for companies. I think they build a couple for Cat. They have their partnership with Dodge. They build the engines for those like Kubota heavy machinery equipments.
Yeah.
So I think I think they've put themselves in a very good strategic spot as a pretty quality engine maker, and being an OEM for companies like Cat or for John Deere, like that requires a lot of investment. Not everyone can do that, so they turn to Cummins to make their engines for them. So kind of within the same realm, but a different spin on it. I really like them. But what's super interesting to me is their new power segment, which is where they're messing with hydrogen to make better fuel cells and kind of help with the transition away from combustible engines to battery powered or fuel cell powered. That segment of their company hasn't produced any earnings yet, but and it's pretty capital intensive. But I think that'll start to turn around in the next couple of years or so, and kind of similar to my opinions on clean energy, that'll be something that picks up a lot of steam in the next decade or within the next decade, I would say.
I think that's a great play. Having the OEM that provides, the parts, the engine to like you said, their partnership with Dodge and Cat, and I'm sure others. So I think that's a great way to play that segment of the market or that sector.
Yeah, I do want to get into Cat or John Deere, one of those two. I'm not sure which ones, but yeah, my only hesitation with them is kind of what you're talking about with you step into one of those new tractors and it's like a spaceship. The useful life of these tractors are so long that
Right.
like the transition from old machinery to new, I'm not sure how strong that is. I mean, I'm sure on a global scale it's super strong, but I just don't know enough about those equipments or
Yeah.
how kind of their useful life or how they're depreciated, how soon they're replaced, those kinds of things. But um,
Yeah, because
I think,
most farmers aren't going out and buying a new tractor every 5 years. Like, they're
oh
making
yeah,
sure that tractor runs for 20, 25, 30 years probably, right?
yeah. But
Making sure
as
their
the
grandkids
world
know how to
continues to
fix it.
develop, those machines are only going to become more and more important. So I think those are both great companies.
And you mentioned also, again, going back to the renewables and transitioning to clean energies. One of the it's a growth stock. It doesn't pay a dividend, but I'm into some lithium. And I'm looking
Hmm.
at the lithium play, like, it's going to take a lot of lithium for all these EV batteries, right?
Yep.
So that's
Yeah, lithium's a great way of playing that. Lithium and copper too, because I
yeah,
mean, if everything becomes an electric vehicle one day, everything needs, these transistors or these switches in order to make these things operate. Um, I heard some ridiculous figure. It was like cars kind of before we got all these touch screen displays in our, right next to our steering wheel and whatnot. Think about cars maybe 15 years ago. Before we got all that stuff, there was maybe like less than 100 transistors in these things, each one of those like an individual switch to trigger something.
yeah,
Now it's in the thousands, and every single one of those things requires silicon and copper, and now we're throwing batteries into the mix. Lithium, super important. So yeah, kind of playing the materials of those sectors is really smart.
yeah. And like I said, it's hopefully a growth stock right now. The
Yeah.
the price has been kind of all over the place. I bought it quite low, so I'm happy that at one point it skyrocketed. So I only had a small position, but it was still like, you know what, I'm going to sell a few of these just to take that profit and hold on to the other few that I have left and see
Just
where
let
the
them
stock
run.
goes, right?
Yeah. So is that company a miner of lithium, or how exactly does it work? How do they
So
collect
there's
it?
the one that I own is actually, you know what, I'm going to have to look back into it because it's been a while since I've even looked at it closely. Um, they were about to start mining, so I'm
Mm.
guessing they are mining by now. And then there was another one that's on my watch list that I never did pull the trigger on, and I regret not doing it because it has more or less doubled in almost tripled in price since when I first looked at it. And they were already mining at the time, so you know, yeah.
Yeah. The companies like that are gonna get a pretty big boost within the next few years, I bet. I've been following kind of the CHIPS Act and the Inflation Reduction Bill and the attempt to pass the Build Back Better plan. And I don't know if you're familiar with like the US car industry at all, but the Detroit area, the Steel Belt, what
Yeah,
it used to be called before it became what it is, that area is now kind of, at least politicians are kind of posing the trying to like revamp that area and call it the battery belt now.
yeah,
So as all these car manufacturers kind of re-enter that area and focus on EVs rather than, internal combustion engines, that battery belt's going to like be the fuel blood for a lot of mining companies just like that, which I think is interesting. So do you kind of follow? I don't know much about Canada's government, but do you follow things like that and kind of see where the government's putting money to and trying to follow the money, I guess?
a little bit, but I also try to just avoid a lot of the noise from both the
Yeah.
Canadian and U.S. governments.
That's a good move.
um, to your point about Detroit, obviously it's right on the Canadian border, and right across the river from Detroit is Windsor, Ontario. And so, yeah, there's a lot of back and forth, and always has been with the auto industry. And yeah, same thing in Windsor, trying to, you know, build. I believe there was some, and so southwestern Ontario is obviously a large area, so there's other places down there. And it was announced recently that one of the old car plants is going to be making or already is making electric vehicles.
Hmm.
I'm guessing it's GM. GM is huge down in that area, and I know Ford is quite in that area as well. But yeah, so just very interesting that back and forth between Windsor and Detroit and automotive industry. It's always been there for as long as I've been
Yeah.
alive.
Hmm.
Another interesting note on that one is Detroit is actually north of Windsor just because of the way the river twists.
Oh,
So it's
really?
yeah. So Detroit is north of Canada.
Yeah, I guess there are a couple spots like that. You don't really think about how there's certain areas north of Canada that's still the US. It's kind of weird to think about.
Yeah, just kind of weird geography. But anyways, that's on a side note again. Oh, awesome. Well, this has been an incredible conversation. Thank you so much for being a guest here on the Passive Income Podcast. Is there anything else you'd like to say before closing out?
Yeah, just thanks for having me on. Great conversation. I mean, you brought up a couple of areas, like transportation, a couple other staples, little things that I definitely should look into and kind of I'm sure there's some gems out there that I can use to diversify my portfolio a little bit more. So appreciate always getting a new perspective. Love chatting about this stuff. Always kind of helps you question your biases sometimes or question your theses as well as you kind of have to discuss the things that you throw your money at. So it's always good. I appreciate it.
Yeah, and that's exactly what so many people have told me either here on the podcast or on Twitter saying, "Oh, I've listened to so and so and you've made me think about this." And that's exactly what have been trying to do with this is just like bring people together, share ideas, share knowledge, and if it helps somebody think of something they haven't thought of before and it helps them, that's great, right? So, yeah, it's just and it's been fun. It's been so much fun having so many guests and talking to so many people about so many different ideas and strategies and knowledge and again, it's been a great conversation with you as well. So, thank you. Really appreciate having you on.
Yeah, I appreciate you having me on. You got a good track record of people that you've made videos with. I mean, when you invited me and I kind of scrolled through your YouTube, the first person that stood out was Barry Milligan. He's pretty active on the Twitter space, and I kind of seeing him on screen and hearing him talk was like almost kind of surreal because he just seems like such a cool dude on Twitter. But
Yeah.
you've had like JR Dividends, who's a guy I've chatted with a lot, Darth Dividends, a couple of the bigger dividend guys. It's really cool seeing you get so many different people up on this thing for a chat. So
In
kudos to you. It's
February,
pretty sweet.
I have two of the biggest Twitter dividend accounts scheduled.
Oh yeah.
Decade Investor and Dividend Hero.
Nice. When's that happening?
Mid-February for Decade Investor and end of February for Hero.
Awesome. I'll have to keep my eye out for those ones.
Yeah, so definitely subscribe below and turn notifications on so you don't miss those. All right. Thanks again.
Yep. Thank you.